Is investing in real estate better than stocks? Welcome back. Now, if you're asking that question, is investing real estate better than stocks? Well, let me tell you something. If you're talking to someone that bought stocks like Apple or Microsoft or Amazon or any one of those, even Facebook, if they had bought one of those stocks when that company initially called an IPO, the initial public offering, well, those people actually made a fortune. So it's really no contest if they bought one of those. But in the real world, there's thousands of stocks out there, but there's only a precious few that make the big money, like the Amazons and the Facebooks and so on. So I'm not negative on the market at all, but you really need to know what you're doing. So the leaders of the marketplace, meaning the stock market, seem to change and go through cycles every 5 or 10 years. There was a time when General Motors and those companies were leading the market. Well, today it's Microsoft and Apple and Amazon and Facebook. All right, so those markets will change. I'm not going to say that I'm going to be an investor because I think it's maybe a little late for that market. But if you had the insight and you had the intuition that you could buy and see a public offering was going to take place and it was big time and you could get it, well, you're probably going to make yourself a lot of money. So which is better, real estate or the stock market? Well, I kind of like real estate, and I'll give you a lot of reasons why, but I'm not negative on the stock market, because if you are one of those people that invested $10,000 in Facebook at the initial public offering, well, you probably have to have a software program to collect your money now. You get so much money coming in. Those kind of speculative stocks are very good. As I say, if you got the insight and you've got the intuition to do that, and you can see the future, go for it. I've been kind of a bricks and mortar guy my whole life, so I'm partial to the real estate. So does that mean one's better than the other? I don't think so, but they're two different skills. One skill is more hands-on with real estate, whereas the stock market, you have to be concerned, do you understand the management team? Do you understand the product that's going to be marketed? Do you understand that the market's going to have rapid up and rapid down? Can you handle that kind of market? Well, if you can, then that real estate market is probably going to be pretty dull for you. But for sure, there's lots of somebodies out there that made a bundle in the stock market over the past few years. Now, will it always go up? I don't know, but I know that it goes up and it goes down, it goes up and it goes down. Now, real estate cycles too, but nowhere near the sharpness of the cycle where it can drop major drops in the afternoon. Okay, so most of the people that are watching my video are watching YouTube, and they fit into a category where they've sort of missed out on those big booming stocks, and they still want to make money, and they kind of like the idea of being in a market that's a little bit more on the stable side. So I find my people are looking for real estate, but they'd like to get a deal. And so 30 years ago, I discovered where to get a lot of good deals, and I'll give you a little insight into that as we go along through this video and all the other videos on my channel. All right, now the stock market, everybody wants to compare it. So there's a lot of gurus out there, okay? So the stock market has everything from stockbrokers to financial planners to CPAs to attorneys. There's always someone to give you advice. And it seems the standard or the traditional advice is buy growth stocks, meaning they're going to grow and get better, and you'll earn 7 to 10% over a long period of time. Well, that might be the case, and that sure sounds good. All right, but that's the standard bill of fare that you hear when you talk about the stock market. So for me to criticize it would be absolutely insane. All I can say is, can you handle that volatility, and can you see the future of those stocks? All right, so in the real world that I'm in, I'm trying to produce money today. As a matter of fact, I'm so risk adverse, I want to see that I can make money before I buy. So let me say that again. I want to see that I can make money before I buy. So that's exactly what I do. And I discovered a program to do that years ago that's been around for 200 years. So it depends upon where you're going to do your investing. If you're going to invest in that initial public offering, you might become a millionaire in a short period of time. You'll certainly be able to make money faster than you could in real estate, but you could certainly lose the money faster than you could in real estate. So that's going to be a judgment that you're going to have to make. Remember what I said. You're going to have to understand what the management team's doing, what the product's doing, what the board of directors is doing, and there's risk along the way. So you need to open up your mind to that. So 30 years ago, I discovered a market that had been around for over 200 years, and what it was old-fashioned real estate. So old-fashioned real estate had a subset, which is called tax liens and tax deed. So call that an alternative to the real estate market. All right, now the research that I did, I figured out right away that this was happening in 3,000 different counties across the United States. All right, that meant these properties that were in this subset, something was wrong with them. What was wrong with them? People didn't want them. Okay, the government didn't want them, and the people that owned them didn't want them. Now, how do we know they didn't want them? Because they didn't pay their taxes. And the rules are in the United States, passed by the legislature, that if you don't pay taxes, then legislature's issued a mandate to the county that the county must levy the taxes, try to collect the taxes, and if they can't collect it, they're going to confiscate the house and resell it. So this is a small subset of the market. Now, how small is it? Well, there's millions of properties involved, because in the United States, there's over 100 million taxable properties. All right, 1 or 2% of those people will walk away from, and they won't pay the tax. So we're working in a very small subset of the market. However, these properties where people didn't pay tax are being confiscated by the local government. So I discovered that. Now, what does the local government want? Well, they just want to get rid of the property. So what do? They auction it for 10 cents, 20 cents, 30 cents on the dollar. Now imagine yourself buying a property for 10 cents, 20 cents, 30 cents on the dollar. Would that be a good deal? Yes. But right away you're saying, what about the mortgage? Well, I'll tell you, the county treasurer actually cancels the mortgage at the public record. I said the county treasurer cancels at the public records. So that means these properties are coming back on the market with 60, 70, and 80% discounts with no mortgage. All right, so which is good for you? Do you want stock market? I'm not negative on the stock market. You'll probably make money a lot faster there than you would in real estate. But again, you could lose it a lot faster. All right, so which are you? Are you a conservative investor? Well, that's what I am. I'm conservative. I'm risk adverse. I don't want to get in the market and wait for it. Now, I've been in the market my whole life. By that I mean I've been buying real estate. And when I started buying real estate, it was rental properties. It grew to 100 units, grew to 300 units, and I had to wait for the market to creep up very slowly as we could raise the rents. That's not the business I'm in now. Now I'm in a subset of that market called tax liens and tax deed. So there's a good chance that I'm going to know how much money I'm going to make before I buy the property. How will I know? Because the government is going to put these properties on the market for pennies on the dollar. So what are we talking about today? We're talking about, is real estate better than stocks? Well, I don't think either one of them is bad. I think they're both good, but they're two different investors. One investor is willing to have other people use their money. They're willing to let other people manage the property. They'll let other people if there's anything to take care of it, they're going to have another board of directors or whatever. In other words, they're willing to let a lot of other people make the money. So they pretty much have to pray that those people are going to do a good job. All right, they find that out by research and track record, of course. All right, I'm on the side where I want to have hands-on. I want to be able to look at it. I want to be able to see it. I want to be able to see if I can make a profit ahead of time. And I want to buy it for absolute bargain price. 10, 20, 30 cents on the dollar with no mortgage is good enough for me because I can see right then and there whether I'm going to be able to make a profit. Two different kinds of investors. Is one better than the other? No. I don't think one's better than the other. So someone said, is real estate better than stocks? I don't think so. Someone bought Apple or Microsoft. There's no way any real estate's going to keep up with what those stocks are doing. Nowhere near that. There's also no worry about who the chief financial officer is. No worry about the president. No worry about if he gets in bad mouthing with the politicians. No worry about the news. All right, the real estate generally is creeping up on a regular basis, going up and up. All right, now if the president of a stock company mismanaged the company, that's one problem. But what about if the president of the United States inflates the money? Now the money's a problem. So if the money's a problem, what's going to happen with stocks? Well, you watch what happens to the stock market when the government is flooding the market with money. Watch what happens. It goes up like crazy because people want to try to take advantage of that. All right, now getting wealthy is always going to be a choice. What's the choice? The choice is you're going to make the decision. And the decision is, if you like stocks, I'm not negative on that. Could you make money quickly? Yes, but you can also lose it quickly. I'm a conservative investor. I want investments that have the high risk. So I eliminate the risk because I make my money when I buy. Let me say that again. I make my money when I buy. So I control my money and I don't have money managers. Whereas if you're a stock investor, you're going to have someone else got to do that. All right. So where's the market gone? Well, you can always look at the market. You can remember that General Motors started 100 years ago. First car they built was a Buick. It was built by a buggy maker. That company grew and grew and grew. And think of all the different cars they made. Everything from Pontiacs to Oldsmobiles to Chevys to Cadillacs. Are they all still around? No. So the companies get old and they get fat and they don't change. All right, that's the stock market. That's not going to happen in this kind of real estate I'm involved. I'm buying at rock bottom dollar, and I've got to turn the property and sell it to make a profit. So I have to know I'm going to make a profit right away. A lot of difference. One's hands-on, and the other isn't hands-on. All right, now, it doesn't matter what part of the country you're in. The cycles in the market are always going to be up and down in the real estate, and they're always going to be up and down with the stocks. So you need to think about which one of those that you can handle. So the question that's on the table today is investing in real estate better than stocks. Well, I don't think that real estate's any better than stocks. I think it's altogether different than stock. So I would start thinking about the differences rather than are you going to use one or the other. Now, many real estate investors do both. They invest in the stock market and they invest in the real estate market. You can do both. All right. Now, what's going to happen? Well, you're going to have to think about where you're going to be in the future. Where do you want to be in the future? If you want safe, conservative investments, you probably want to put money in the bank, or you want to probably buy tax lien certificates. If you're willing to buy growth stocks, then you should be willing to look at some of the subsets of real estate because that's what it is. It's growth because you're going to buy at 30 cents on the dollar and there'll be no mortgage. Now you're going to be able to sell for 50 or 60 cents on the dollar and make a relatively quick profit. Are you going to make it as quick as stocks? No, but over 3 to 6 months, you can probably make profits. Okay, now my name is Ted Thomas, and I have a couple of recommendations before I leave. My first recommendation is this. Number one, if you're going to go out and buy these properties, you need to get educated. You need to get educated if you're going to be in the stock business. But you need to get educated and make sure that you have looked at the property, boots on the ground on the property. Don't buy it off a list. Don't buy it from a picture. I don't know what happened to the property. It might have been a hurricane. There might have been a fire. It might be next to a chicken farm. Don't buy what you haven't seen. You wouldn't marry the woman unless you had seen her. All right? So that's number one. Number two, figure out what your exit strategy is before you buy. So if you know what you can sell it for, now you can determine how you're going to be able to make money. Some people go to the auction, they bid and they bid and they bid and they bid. They bid all the way up to, they put more money into the property than it's actually worth. So I'm Ted Thomas, and right below me is a free gift for you.